Welcome back to Next Gen Investing. It's now time for FOMO. And today we are discussing Alphabet, which is our real leader of the big tech names today, and really of a lot of the market weakness we're seeing on the back of this Berkshire Hathaway stake, $4.3 billion. So Marley Kayden is joining us, of course, host for the Schwab Network, to make sense of it all. And I will say that I know we touched all-time highs earlier today, but we've pulled back pretty substantially. I guess the win is that we're still sitting up about 3.4% here.
Yeah, we've pulled back, $6, $7 from the highs that we saw earlier, but still a really positive story here. Like you mentioned, Berkshire Hathaway disclosed that they bought close to 18 million shares of Alphabet in the third quarter. Those were valued at about $4.3 billion at the end of September when the third quarter finished, now worth about $4.9 billion. So we're getting up into the $5 billion range. Now, that is a relatively small purchase when you look at the grand scheme of Berkshire's roughly $300 billion equity portfolio. But the stake, when they disclosed it, was its 10th largest equity stake. So a pretty big, significant play here in Alphabet. Also a very rare venture into the tech sector for Berkshire, which I think is sort of the more significant move here. And also a sign of confidence, in Alphabet and some of the spending that we've seen on AI infrastructure, and that oftentimes Berkshire buys a lot of what they consider to be bargains. And we know that Alphabet has traded, traditionally as one of the cheaper large tech companies here. But I think a significant vote of confidence in this play here. CFRA saying that they think that Berkshire likely finds more comfort investing in Alphabet over some of the other tech plays, given the high free cash flow potential of its core businesses, coupled with an attractive valuation that's about 22 times its 27 EPS. And amid a healthy top-line growth trajectory. So that was their sort of takeaway, that same sort of observation that it may be that it is a less costly tech play. But interesting to note, that of all of the tech plays, that this is where their confidence is.
Yeah, and I guess some of the speculation, too, is that this probably wasn't, there's no way to know for sure, outgoing CEO Warren Buffett's decision, but perhaps the investment portfolio managers, Todd Combs, or I think there's another gentleman who runs things there, maybe initiated this. This has been one of the, I guess, sort of the great white whales or whatever they say that got the one that got away for Mr. Buffett, as he lamented not buying this back in the day. But they also have said they're not hoarding cash for Greg Abel, Marley. So are we expecting them to perhaps continue to hold that cash just because that's what they feel is right? Or we expect them to go on a shopping spree here, or is it to be determined?
I think it's a TBD at this point. Like you mentioned, Berkshire generally doesn't disclose. They don't disclose who made the picks. Warren Buffett generally doesn't disclose which are his. I do think it's important to note, though, that Ted Wessler and Todd Combs, they only manage roughly 10% of the entire portfolio.
So this would be a big buy.
So this would be a monster purchase if that is part of their 10%, if you really think about it in that way. I don't know if that leans you one way or the other with that figure based on who's this pick, if it's Buffett or the other two. But it remains to be seen what the move is here, as this is one of the final outgoing plays during Buffett's tenure. We know that he's exiting. Also, Berkshire cut its stake in Apple.
By another $10 billion.
By another,
right?
Yeah, exactly. And so it is really interesting to know that these are sort of the moves that they're making while it's a time of change. But what we do know about Berkshire, what we do know about Buffett, is that when they move or he moves, the market responds. And
no
that's what we're
that.
seeing.
You see that today for sure. And I guess the one thing, too, is if they are offloading and reducing that Apple position, there's really only a handful of companies that they could invest almost $5 billion into and have it not be like a significant chunk of the outstanding shares. So in some ways, these Magnificent Seven names just are liquidity sponges.
That's a really good point, too. And I know that everyone was like, sort of the commentary I saw this morning was that, it's unusual for them to be this tech investor. But I mean, if you're offloading out, I don't necessarily see it as a weak spot move for Apple as much as it's more of a vote of confidence in Alphabet. And I mean, to not be on board with big tech in this market environment, I think is a mistake.
Well, and I think it's clear that maybe the Warren Buffett of 20 years ago, 15 years ago, was skeptical of some of these big rises in valuations. But, I mean, Mr. Buffett and Berkshire are as successful as they are in 2025 because of their investment in Apple.
It's true. And also they've been sitting on, now we've had two reports from them, quarterly updates, that we're sitting on their biggest cash pile on record. So I think it makes sense to be now allocating that, elsewhere. But it will be an interesting Berkshire to know it not under the helm of course, Warren Buffett, as that's coming. He's 95 years old, though, which is, I know that he, we've always talked about like his age, and he's basically, how much is he running the company? This guy, I'm like, you deserve some quiet, peaceful retirement. I mean, 95 years old is insane.
I think with all of his success, though, at a certain point, it probably became quiet and peaceful and just fun at some point. But one other thing I want to bring up, too, about Google that has been brought up multiple times since they revealed this stake and reduced in Apple is that it looks like we might be getting another Google AI coming up here shortly. That sort of seems to be the Gemini 3 is expected. Some of the odds makers like Polymarket has a 91% prediction that it's coming this week. And interestingly enough, Alphabet CEO responded on social media on X saying that the bet's on the launch with a pair of thinking emojis. So, maybe a little bit of baiting there, but interesting to see that there could be some more potential headlines coming for Alphabet as well. And, the stock has performed, while it is cheaper than some of its big tech counterparts, still up 50% year to date. Since April, the stock price has nearly doubled since its lows.
Last thing I'm going to say, too, is if we kind of look at these Magnificent Seven names and the businesses they operate in, really the only ones that kind of fit the Buffett mold, even partially, if you try to marry, new age tech investing and sort of the value side, would be Alphabet, Apple, Microsoft, and maybe Amazon. Nvidia, probably too expensive, even though the growth is really incredible. Tesla, different type of story. And of course, Meta, probably a little bit different story. Well, if they're reducing out of Apple, that only really leaves Amazon, Alphabet, and Microsoft. And of those three, Amazon, the most cyclical. They have a ton of cash. They're probably not super positive on the economy. So it's really Alphabet or Microsoft, and it looks like they chose Alphabet.
Yeah, and I mean, hey, a safe bet today was we did see shares touch all-time highs. Again, I know pulling back from those levels, but now as we do think through trading Alphabet here, I mean, it was not so much a standout last week, but it has been still a really resilient player. We're still up almost 50% this year.
Yeah, and we've seen when the current Magnificent Seven, whichever name is sort of in the spotlight, can run a little bit longer than you think. And so what I looked at here was a call butterfly spread in order to keep the risk contained. But say over the next couple weeks, you still think that this stock will continue to move higher and perhaps move towards, let's say, 300 a share. In this particular case, it's the 290, 300, 310 for a $2 debit. Your break evens would be between 292 and 308 at that expiration date. And if it perfectly pinned 300, guys, a chance to make 800 on this spread with a really interesting looking risk profile, one that benefits the most, the more properly and correctly and precisely, I think, most importantly, you can project where that stock ends up near that expiration date.
Yeah, and Alphabet, of course, we already have like the majority of their financial outlook for this year, all of their financial outlook for this year, so we don't really have any major catalysts, although I'm sure we'll see a market maker move priced in to Alphabet shares ahead of Nvidia earnings later this week. But we'll leave it there for FOMO today. Appreciate it to, of course, Marley Kayden, host for the Schwab Network, for giving us that breakdown on Buffett's big purchase into Alphabet.